The traditional protection is gold, and the more recent version is Bitcoin. Proof of stake is like a company, and proof of work is something completely different. But I think you could admire both for what they are for different reasons. We've got Ethereum, which is the post office. I go there to post my dollars, post my NFTs, post my contracts.
As you said, proof of stake, it's kind of like a company, like an illegal security. It should not be there because I personally don't see a use case. All the NFTs, they are based on blockchain, and blockchain is really a really inefficient way to store and save stuff. I don't see a value in any altcoin.
I'm not a Bitcoiner, I'm not a gold person, I'm not a fiat guy. I'm in the middle of all of these groups with absolutely no friends.
How did you, like, before we get in the whole Bitcoin and gold topics and what's the problem with the current financial system, I would like to know, like, how did you first get started with investing? How did you go down the road with finding gold, later finding Bitcoin, and finding the way to saving your money outside of the fiat system?
So I had a bit of time in the mid-90s when I was about 25. In fact, before that, when I was a student, we were in the UK, we were doing privatizations. The government was selling the water companies, the electricity companies, even BP, lots of different things. And the public was encouraged to get involved, and the bank would lend you money. You could buy shares; they would go up, and it was quite fun. It was a fun, the early 90s, so and the late 80s. So I did a couple of those government privatizations that got me interested in the stock market, and then I joined HSBC in 1998. I did some time in the Army, British Army, and after that, I joined HSBC in the asset management, and I came across gold in the late 90s. And the price was 250, up 55. And I had a presentation from Tocqueville Asset Management, a Canadian company. And I heard this contrarian idea saying it's the end of this down cycle, 20 years of falling prices. Of course, gold wasn't falling in every currency, and it was going up in Mexican pesos and Turkish lira and all that. But it was falling in dollars and stuff and Deutschmarks. And I became interested in gold in 1999, and I became a professional investor in gold over the next 25 years. And then in about 2012, I came across Bitcoin, and I said it was a ridiculous idea. You can cut and paste it. And then I realized I was wrong, and so I became a bull in 2013.
Oh, 13, that's really, like, you realized it really early on. Like, how did you came into that and realize it?
I think I'm really late.
In 2013, wow. I think even now people that are coming in, it's interesting.
The price was up 1,500 times when I arrived.
I mean, from starting from zero, like then you were really late into gold when you look at it like that.
That's a very good point. I was 5,000 years into gold. Yeah, okay.
I mean, you ran around with when the gold was there, but yeah. I think gold bucks and also Bitcoin maxes, however you wanna call them, they both have one big similarity. Like, both are really heavy. Like, they always describe the problem, the current financial system, quite the same. Like, before I started investing, I was into stocks, and then through stocks I learned about Bitcoin. And before, I did not notice, like, what is money, what's the current financial system. I just was in stocks. And with Bitcoin, I learned about gold also, and I learned about the value of gold, and I learned about the current financial system and what's wrong with our money. Like, how would you describe it? What's wrong with the fiat system? Why are you in Bitcoin and gold? And yeah, like, why are you protecting your financial energy with Bitcoin and gold?
I mean, it's a good question, but I think we invest in the stock market and we invest in Bitcoin and gold for kind of the same reasons, but at different times, really. But no one denies that fiat money is going down. Yeah, it's a question of how quickly it's going down, and that's inflation. High inflation means it's going down very quickly. Low inflation means it's going down slowly, but it's always going down, and that's kind of the design of the system. It's this idea, it's an incentive to borrow, to invest, and to put the money to work. So it's not all bad, the fiat system. But I think that in recent years, the central banks really aren't looking after the money in the way they could do. So, if you go back to the 60s, 70s, 80s, the Deutschmark and the Swiss, the Deutschmark really, and maybe the yen too, were very, very well looked after by their central banks. They were a store of value. The pound was going down. The dollar was bouncing high and low as it always does. But there were good currencies and there were bad currencies. In the emerging markets, we had, very bad currencies. The South African rand in the 80s, 90s was very, very weak. Mexican and so forth. And it's just a question of, if you have interest rates high enough above inflation and you have a real rate of return, then the fiat system's okay. But there's always the temptation for the politician to keep the interest rates down, pro-growth policy, who cares about the value of the money? Just let that go down, try and keep the electorate happy. And so if you understand that, then you realize that you have to protect yourself against it. And the traditional protection is gold. And the more recent version is Bitcoin. They're different. We'll get into that. I think they're economically more or less the same. Physically, they're very, very different. So that's kind of obvious. I've sort of figured out a way to put them together, and hopefully we'll get to that as well. But I suppose, I think a portfolio should have different things in it. That's the whole point of diversification. If you have a portfolio with 10 things and all of them are up on one day, then you'll be lucky if it goes up again tomorrow, because normally these things work in different ways. So you should hope that some of the things in your portfolio aren't doing well and some of the things are doing well, because that means you're diversified. And so you want some risk and then you want some safe haven. And Bitcoin and gold are both safe haven in different ways at different times. And I think to illustrate that, obviously, I think gold, people kind of know this is a safe haven. But with Bitcoin, when the banks went down in Q1 2023, Bitcoin went up. And I think that was a very exciting moment for the Bitcoiners, because you recognize that actually Bitcoin is correlated with banking stocks. It likes interest rates to go up. It likes inflation to go up, a bit like banks, and that's very, very interesting that when the Bitcoin kind of behaves like a bank, but when all the banks were in trouble, Bitcoin went up. So it kind of told you what you already knew, which was this is the future of money.
Yeah, it's like, yeah. Before we get more into Bitcoin and gold, I want to stay a little bit with the fiat system. Do you think it will always stick around? Like, will it be always just be there, or will it be repurposed? Will it be backed by Bitcoin or gold again? Will it be completely gone and we have one like gold backed or Bitcoin backed system?
I think the fiat system will always go through change, but I think it can survive in the long term. It doesn't mean to say that the pound, dollar, euro is going to be useful. I mean, it's going to be going down all the time, and it can keep on going down. Yeah, that's okay. You just put another zero on the note. We've seen this before. But, it's not going to be a good store of value, but the system can survive. Let's go back to the gold standard. I mean, if we think what is money 100 years ago, or 500 years ago, we tend to think of it as physical and a simple system. But I think that if you go back 2,000 years to the Romans or whatever, or even the ancient Greeks, when they start digging, the archaeologists start digging, they find the beans, they find the coins, they never find the yield curve. There was a system of credit at the time. You can't bury a yield curve, right? The IOUs between people, but there was one. So, we've got to remember that. And these people weren't primitive. And systems of credit have existed for a very, very long time. We all like to think it was barter, but it wasn't. It was always more sophisticated than that. People aren't stupid. They never were stupid. And so there was always IOUs and creative systems, more creative than we think. But if we come back to more recent history, let's say the 1950s, 60s, or even the 19th century or whatever, what is gold? It's a fintech. It's the original financial technology. It's got a very high density of 19.3. It's shiny. Ladies like it and all that. And so if I go in a ship to the other side of the world and trade 100 years ago, My gold is a financial technology because I can get to Japan or China and they go, that's gold, no problem. Global store of value. I get that. It's the same price in Amsterdam as it is in Shanghai, and it works. And people will say tungsten. Well, tungsten's 19, not 19.3, and it's not gold and shiny, and you can very easily test the difference for these things. So gold was the original financial technology, and it's quite interesting that the gold standard ended in the early 70s. What happened in the early 70s? Computers, international telephones, in a way that they didn't exist 30 years, 20 years before. It was radios and, telegraph and beep, 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 beep. And suddenly in the 70s, you have these very powerful global system of telecommunications and computing, which enables the fiat system. So to answer your question a moment ago about the fiat system, partly there's the real interest rate side. Are the central bankers looking after the fiat currency? And there's also the tech side. You couldn't have had a fiat system in an era without decent technology. You've got to have the real-time price feed. There is no fix. There is no fix or reference to gold. And so therefore, the fiat system died, or the gold standard died, and the fiat system took over 50 years ago because it could. Technology allowed it to. And I think that's a point that a lot of people haven't understood. Fiat, we didn't get fiat, we thought it was better. It finally could arrive. It couldn't have arrived before. So it's been around 50 years, or 52 years, and it kind of works. It's not chaos. Life's quite good, but it's not a good store of value. It's not a good investment. Yeah. And even today, people say 5% interest. Great. Well, congratulations. So after tax, 5 becomes 2.5, and after inflation, it becomes 0. So there is no real return on a bank deposit after tax.
Yeah. Yeah, I mean, fiat kind of works, and it also depends kind of where you're living. Like there are unbanked people that really need alternative system, but in our Western world, and like for me, I'm in Austria. It works like I get a salary, I can pay. Of course, I lose my purchasing power over time, but in that regard, in some or most of the regions in the world, it works. And why do you not?
I'll make a point there, because what you're saying is that the fiat, your euro has got zero volatility in Austria. My pound has zero volatility in the UK. My pound has 8% volatility if I come to Austria. Yeah, and so it starts to become a different thing as you leave your own shores. And then if you go to Nigeria or to Argentina or Turkey, suddenly you're faced with much higher inflation. Now, there's still zero inflation. Okay, maybe not in Argentina, but if your inflation is sort of under 50%, you don't notice it in 1 week, 1 day, 1 week, but you notice it in a month, 2 months. And if your inflation is 160 like Argentina, you notice it in 1 week. But here we are in Europe, and even if our inflation is 5 or something, we don't really notice it on a 2-3 week basis. So we consider our money, the cash in our pocket, to be stable in the short term. In a high inflation currency, it's not even stable in the short term.
Yeah, I saw some pictures where they have in a restaurant like a card where they put the prices down and put new prices right next to it, because they cannot switch the menu cards every week. It's quite chaotic, and it's quite for me as an Austrian who only is in like a kind of Western protected world where in the short term there's not as much volatility. It's kind of hard to imagine. And why, like you say now, like why do you hold gold and Bitcoin? What's your allocation? Like why, like do you go, or like most of it is gold, a little bit of Bitcoin? What's your allocation and strategy looking like there?
So the question is a very good one. And why is, I mean, we've got the bold index. The bold index combines Bitcoin and gold. And why is the approach what it is, which is to allocate according to risk? So let's say I put 50 euros into gold, 50 euros into Bitcoin. Yeah, is my portfolio balanced? No, because we know that gold, typically on a normal day, if gold goes up, Bitcoin goes down, and vice versa. It happens all the time. So, what a good day for Bitcoin is probably a bad day for gold. Not always, but generally speaking. So there's a beautiful negative correlation between the two, low or negative correlation between the assets. So 50 euros in Bitcoin is way more risky than 50 euros in gold. Yeah. And you can count that or measure that by the volatility of the assets. And it turns out that if you look at the volatility over the last year of Bitcoin and gold, and we've got some simple mathematics that we have on our website. It's called inverse volatility. And basically, if you have two assets of the same volatility, the portfolio is 50-50. Yeah. But the difference between Bitcoin and gold at the moment suggests you want to be 25% Bitcoin and 75% gold. And if you do that, you've got the same amount of risk in each asset. Not the same amount of money, but the same amount of risk. So your probability of losing 10 euros out of 100 euros is the same in each asset. And that's the point. So if you balance your portfolio according to risk, then you'll end up with lots of gold and a little bit of Bitcoin. And that's just what they've done in TradFi with what they call the risk parity portfolios, like Ray Dalio. He has loads of bonds and a few equities, and you get a similar outcome. So it's just taking that simple idea and saying how can we do this to take a lot of risk out of Bitcoin? Because let's face it. Whilst we can all be very bullish on Bitcoin and see the future, and I'm sure we will agree on many, many points, it is highly cyclical and it is a scary thing to hold. I've seen it crash 3 times spectacularly. And so to take some of that
I mean,
out,
it depends.
and incidentally, if you do blend Bitcoin and gold together, there are many other benefits that I'm sure we'll get to, but it's just, you can sleep at night, and it's, crypto could be a very painful place to be sometimes.
Yeah. Like one question just came in my mind because you said crypto, and I'm always preaching Bitcoin, not crypto. And for me, it's like there's a big difference between Bitcoin and crypto. And of course, you can make an argument that Bitcoin is one cryptocurrency. But what do you think of altcoins? And did you ever touch anyone, or did you have always left out the altcoins and stayed Bitcoin only outside of gold?
So at ByteTree, my company ByteTree, we have a token piece of research. We have a Bitcoin piece of research, and we have an altcoin piece of research. And I think that Bitcoin is like gold. It's a neutral, decentralized asset. And I think that the tokens are basically tech stocks. So mentally, I think of them completely different. I think proof of stake is like a company, and proof of work is something completely different. So I totally agree with you. But I think you could admire both for what they are for different reasons. If you think, what is Bitcoin? Well, it's 52% of the crypto space. Ethereum's about 20. Stablecoins are about 10. So we're now at 80. So all the other stuff is 20% of crypto. Yeah. The stablecoins, ETH and Bitcoin is 80%. And I think people don't really think about that when they talk about it. So we're living in a world, we've got Bitcoin, which is the electronic gold, the digital gold. We've got Ethereum, which is the post office. I go there to post my dollars, post my NFTs, post my contracts. Yeah. In the old days, we had an envelope and a stamp. Young people don't know what that means. Do you know what a stamp is?
For a letter, right?
Yeah. Used to write a letter, give it to a pigeon.
Yeah, I think I put like maybe 5 stamps in my life.
Okay, there you go. So you probably paid fees to Ethereum, to ETH, and you.
I know. Yeah, I had. I had Ethereum for like a little bit, but I dismissed it then. It's interesting because the only reason for me for altcoins is another way to get capital. Like it's an other system to get venture capital, to tokenize part of your company and bring people to invest in your company. Because as you said, proof of stake, it's kind of like a company. Like this, the staking reward reminds me of a dividend. The hierarchy reminds me of a stock. Like proof of stake is not different than just like a stock. And then we come to the part where an SEC says, oh, it's like an illegal security. Like it should not be there, because it, like, going public requires a lot of regulatory work. And it's really interesting for me to look at it, what can happen with the altcoins. I personally don't see a use case, a really good one, because also all the NFTs, they are based on blockchain, and blockchain is really a really inefficient way to store and save stuff. It's only good if it's like a ledger, like with Bitcoin. Like for me, is money the only use case for a public ledger, like a blockchain technology? But I could be wrong here. Like I don't know what happens in the future in 10 years, 20 years. Maybe all the stocks are based on blockchain technology, and they are like based on tokenization, and the stock market is basically changing. But that's how I look at it right now. I don't see a value in any altcoin. It's like I don't see the specific use case, but it can happen in
We were writing about one
some
today
kind of
called helium. You know helium? It's like a million different places around the world where you can get access to Wi-Fi through the helium protocol. I mean, there's a use case. There's that file coin, which where you could do file sharing on other people's computers. I think that some of these things are distractive, but most of it is ETH. Most of these projects are trying to compete with Ethereum because there is a proven use case. If there's no Ethereum, there's no stablecoin. And if you listen to Larry Fink, he's talking about the whole world, all the shares and bonds ending up on in this crypto architecture. And I think that's where I am. I think that this is a better way of doing things. It's T+0. And, Bitcoin has got an economic Austrian school, not Austrian geography, but an Austrian element to it. And like gold does. And that's fine. I get that. And the others don't. So the others need to be regulated, and they're just stocks. They're tech stocks. And I think if you leave it at that, they're not in competition with Bitcoin so much. They're still correlated, but I don't think they will be forever. I'm pretty sure that Bitcoin's a very different trade. Proof of stake is useless for a store of value. You really don't want to have a profit engine like Ethereum, if you consider the fees to be profits. It is a store of value, but it's not an off-grid decentralized store of value. But that's fine. So therefore, they've got to please the authorities, whatever that means. Whereas Bitcoin doesn't need.
Yeah, exactly. The altcoins, they need they need some kind of cash flow.
Yeah, but I don't think you have to, to like Bitcoin. I don't think you have to hate altcoins. I think most people realize 99% are worthless. I mean, that's just obvious. But some of them, there's going to be some interesting things that happen over time, and it's hard to know exactly what those things will be and where they pop up. But you've got to have the faith, and I think that I came into this space. I don't know much about computers, but I came into this space and just knew something was going to happen because I witnessed the entire 1990s internet thing, and it started with email and websites, and it's just gone better every year. Every single year, something better comes. And people used to laugh at the internet stocks. They were a joke. And the top 20 sites in 1999 were all porn. So everyone was, it was terrifying. It's like, how do you take the internet seriously when it's just naked people? But it was. And then, of course, porn's still big, but everything else got bigger. Yeah. You now file your taxes, your medical records, everything, AI, So the world has moved on. And I think you've got to just sort of say that if crypto, Bitcoin, etc., was worthless, it would already be dead. It's been going too long.
I'm super excited to announce that this podcast just got the first ever sponsor. I just started the podcast out like 3 months ago, and now we have 21 Bitcoin as a partner for this podcast. 21 Bitcoin is Bitcoin only from day one, and they teach and preach self-custody. This is my go-to exchange when someone asks me, oh, where can I buy my Bitcoin from? This is the easiest entry for Bitcoiners. And if you want lower fees, plus at the same time support this podcast, use code Robin and click the link in the description. Let's move back to completely only Bitcoin and gold. I have an interesting question for people. Like there are not a lot of people that I see in my Bitcoin bubble. Maybe they are like in the gold bubble more, that are really Bitcoin and gold. I know some that are just gold. I know some that are only Bitcoin. I know some that switched from gold only to Bitcoin only. But you are in a unique position where you see a value and a big value in both. I think you also probably have like big goals for both. In what regard is gold superior to Bitcoin, and in what regard is like Bitcoin superior to gold?
Yeah, good question. I mean, gold's advantages, it doesn't require electricity. Yeah, it's quite nice. It's established in government circles. It's established with central banks. Bitcoin's not. Will it be one day? Maybe. Unlikely, because the central banks already have gold. Gold's got a big demand in jewelry, small demand in industry, but a big demand in jewelry. And there's a very established ecosystem in the gold market. The gold ETFs are 180 billion. There's an active futures contracts in Shanghai, in Chicago, and Dubai, and places like that. So it's a very established market, and there's plenty of value in gold. There's $13 trillion, $14 trillion, something like that. In Bitcoin, it's just a much smaller market. Its advantages, to think about the advantages rather than the disadvantages. The advantages, obviously, its transportability. You can go across a border with $1 billion in your brain, or you remember
That's
a phrase.
amazing, yeah.
It's an amazing thing. And but I think what do they have in common? They're both politically neutral. Bitcoin's never done anything wrong. Bad people have done bad things with Bitcoin. Bad people have done bad things with dollars. Bad people have done bad things with gold. But gold's never done anything wrong, and Bitcoin's never done anything wrong. It's one's a technology, the other's an element. And they're neutral. They're global brands. They're globally recognized, both of them. And it's quite interesting. I had a photograph of a gold dealer in Turkey, where you go and buy gold coins. And of course, in Turkey, that's quite appealing, where you've got high inflation. But this gold dealer also will sell you Tether or Circle, US dollar stable coins. It will also sell you Bitcoins. So they're kind of naturally together. The people that like gold generally like Bitcoin. But then the people, I think, that the big difference is there are lots and lots of people who think Bitcoin's great and gold's tired. It's an old man. Yeah. And there are lots of people who like gold and think Bitcoin's crazy and risky. And there are even more people that think both are crazy and unnecessary, and we should just stick with the formal financial system. And you're right, what you said a moment ago, and I find myself in the middle of three camps. So I'm not a Bitcoiner, I'm not a gold person, I'm not a fiat guy. I'm in the middle of all of these groups with absolutely no friends. So it's a very lonely place to be, to like Bitcoin and gold and the traditional financial system. And that's where I am, friendless.
Yeah, that's why I actually liked your profile, because it's usually I only have Bitcoiners on. You're the first person I have on the podcast, and I think you're my 28th guest now, that is outside of the Bitcoin only space. Like I don't even have someone that is also into some altcoins, that are also like, some have some gold, some have some equity, some have some real estate next to it. I had British Hodl, maybe you know him from Twitter, on I think a month ago. He went famously from gold only to Bitcoin only, and he talked about his journey. And I try to keep, even though it's called the Bitcoin Path, the podcast, I want to make sure there's some other views also to it. If you completely dismiss Bitcoin, I cannot have you on the show. It's like, then what's the point? Maybe someday I'll make a debate with someone and moderate it. But I want to have a different kind of views, and even like every guest I have on, I disagree with him on some level. Like you cannot
Sure.
have completely agreement. But an interesting comparison between Bitcoin and gold is also that Bitcoin is so much smaller than gold. It's not only the history and all the physicality of it. Bitcoin is like what the gold is 13x in the market capitalization of Bitcoin. Like it's an immense difference from the market capitalization. Do you envision a future in like 10 to, let's say, 50 years, like really far out, where gold has the same market capitalization than Bitcoin, if Bitcoin is the digital version of that gold?
Yes, and I think what happened last Thursday will accelerate that. The Bitcoin ETF is the most important thing in the world. I would say it would never happen without it. So the Bitcoin ETF is essential to fulfill that dream. But I also think that the gold is 13 trillion, but that's going up as well, right? So you've got half. Let's call Bitcoin. I don't know, what is it? 750 billion, something like that. You want to take the
Yeah.
trillion and you haircut 25% for lost coins is my simple idea. And so you've got the gap, which is quite big, 15x, something like that. And one's going up and the other's going up faster. So let's say that gold's going to treble, and that means Bitcoin's got to go up 45 times to get to equalization. But it probably never quite equalizes. It's probably always a little bit behind. You can imagine it because the central banks, that's the big money. That's the really, really big money. And it all depends on, how investors allocate to Bitcoin. So this comes back to the whole, where I really come from. I'm not solely a Bitcoin gold guy. Here at Bytetree, we, as I said, we do tokens, but we also, most of our work is bonds and equities and a little bit of commodities. So we are a multi-asset research organization, and we've created a product called Bold, Bitcoin and Gold. There's an ETF listed in Switzerland and Germany, ticker's Bold. And and it's there to solve a problem, because I looked at Bitcoin and gold. I've always liked gold, and I said, gold people, there's $200 billion or $175 billion of gold in ETFs. It's boring. You can put a little bit of gold, a Bitcoin into that mix and wake it up. Bitcoin people, you've got all that volatility. We can calm it down by putting a little bit of gold into the mix. And because they're naturally uncorrelated, in a typical month, gold's up, Bitcoin's down, all the other way around, and you rebalance. You're always rebalancing, and that adds 5 to 7% per year. So you've got this extraordinarily powerful combination. And now that the world's wealth management industry has been told in America it's allowed to buy Bitcoin, the money's going to come. And I'm just suggesting to people they'd be better off in Bold than they would be the wealth management industry, not everyone, in Bold. Because, if you're sitting there with a client, and I've been through this sort of experience before, and, if you've got some client and you bought them Bitcoin and it goes down 75%, which happens every third or fourth year. Yeah. It's a pretty awful meeting. If you put them in Bitcoin and gold mixed together, then they go, oh, that's all right. That's a very calm outcome. Behaves like Nestle stock. So you've got this thing that goes up nicely, goes up faster than gold because you've got Bitcoin, but to the downside risk is a bit like Nestle. And so you think, wow. So Bitcoin and gold, I just think it's one of those very powerful combinations. And then people say, well, where's your Ethereum? I think we've already answered that. Ethereum is not an off-grid proof of stake, so we don't want that. Where's silver? I don't want silver. It's more volatile and it's less liquid. What about oil? I don't want oil because it's futures. I want real oil, but how can I buy real oil? I can't. I don't want futures in my. So I realize I've got the world's two most liquid alternative assets, Bitcoin and gold, put them together on risk-adjusted basis, and this is a solution for the wealth management industry or for private individuals. Not Bitcoiners like you and your regular listeners who have all the wallets and understand how it all works. I'm talking about the normal person who couldn't give a shit about any of that. They just want some economic exposure.
Yeah, it's interesting because I have some older listeners and some older audiences members. Also, I interact with them on a daily basis on Twitter, and for them, it's usually harder to get into the whole wallet things. Like it's not as easy. It's even for me. It was really like I needed to learn a lot of things. I'm a software developer. And I'm 25. I lived with all of it. Like for me, software is just nature. And I needed to educate myself a lot with the wallets, with cryptography, everything. I can imagine someone who is like maybe, let's say, 70, 80 years old, who has just got a little bit of computer exposure because their grandsons are forcing them to, and they don't need it for work. They maybe retired when the whole computer thing came on. Like there's a lot of education going on that's needed to do. So like I have a lot of respect for everybody above 50, 60, 70 who has Bitcoin in self custody, does the key management itself, and of course, yes, the Bitcoin ETF unlocks a whole lot of capital. Also with like the whole companies, maybe pension funds that are not even able to buy directly Bitcoin because they are not allowed to, but now with the Bitcoin ETF, they are allowed to.
I mean, can I just
One
come back?
interesting question.
Yeah, I'll just finish off on that point.
Yeah.
Is that a lot of young people, obviously they know more about tech, they're more comfortable with tech, but also they're not as rich. I mean, some are, but most aren't. And so most young
Yes.
people, they bought their first crypto trade was 100 euros or 50 euros. And it might have gone up 1,000 times because they were early. I don't know. But, if you came in with 50 euros, you don't worry about software wallets in quite the same way as if you're a 70-year-old person with a pension fund, you're thinking, well, you want me to put 50 grand into this wallet thing? I don't understand. Then the bank's sending them warning letters and all this stuff. And wouldn't you rather go to iShares and just say, can I please have some Bitcoin? So it's very easy
Yeah.
to, with your 50 grand. It's very easy to see why the ETF is so powerful. And before 2003, when the first gold ETF launched, you could not hold gold in a portfolio. It was impossible. You could have held gold futures or gold mining shares. There was one fund in Canada, the Central Fund, which held gold and silver in a investment trust structure. But that was $60 million. It wasn't enough to go around. It was, a small thing. So you've got this ETF crucially solves this problem, which is a very important one that needs to be solved. And I think there's a lot of crap thinking out there. People say, oh well, the whole point of Bitcoin is independence. If you want the independence, then do self custody. If you want the economic exposure, do the ETF. You know, and so you've got choices, and any good sophisticated market gives you lots of choices. With gold, I could buy a gold token, I could buy a gold bar, I can buy a British gold coin, which is tax free in the UK. I'm sure other countries will have different arrangements with their gold coins from their central banks. I can buy foreign ones, I can buy ancient ones as a collector. I can buy futures, I can buy ETFs. I could buy gold bonds. I can have gold loans backed and settled in gold. And so, that's a creative market where you've got a lot of choices. Yeah. And I think a simple market that doesn't have many choices is not nearly as sophisticated as one with many choices. So, Bitcoin in the cryptosphere is way more sophisticated than anything else in terms of the ways you can have Bitcoin, wrapped Bitcoin, Bitcoin miners, Bitcoin lending, all this kind of stuff. So, and futures, you've got a market of depth, and that's very, very important. And you can see Bitcoin's going the same way. We'll never get the pretty little physical Bitcoin things because it's not a physical thing; it's an idea. But the market's highly sophisticated and highly liquid, and that's why I'm so bullish on Bitcoin. At that point, I know it's
Yeah.
real.
I mean, if you want physicality in Bitcoin, you can stamp your seed phrase on some metal thing, but it's not the actual Bitcoin. It's just the words, the information on the seed phrase that's physical. But there's also in the early days, I think, I don't know if they still sell it. You can buy like Bitcoin that look like Bitcoin gold coins, and in there is like a seed phrase where you can redeem them 1 Bitcoin. They sold them in the early days for like 100 euros, and it was 1 Bitcoin on them. Now they would not sell a whole Bitcoin, I think. Like to close it up, the podcast, I have two more questions. The first is like kind of the performance you are expecting for Bitcoin and gold in the next like coming like 5-10 years, like under 5 years. I know it's completely speculation, but the longer you go out, the more you can say, I think. What do you see as performance of gold and Bitcoin in the next like 5, 10, 20 years?
I wrote an article in 2020 in the LBMA. The LBMA is the body for gold, the London Metal Bullion Association. I wrote an article in their magazine saying $7,000 gold by 2030. It was called The Rational Case for $7,000 gold by 2030. So gold's 2,000, just over 2,000 today. So we're talking 3.5 times over the next 6-7 years. Will we get there? I think so. It does feel right to me, and I've laid out the case why. And if you think that the number one thing is gold basically behaves like 20-year tips, and so what that means is it likes low interest rates, fine, but it hasn't minded rates going up in the last couple of years, which is pretty interesting. And that's because the world's divided. China is no longer economically so close to us as it was before the war in Ukraine. And the world's a crazier place. And people don't trust the US treasuries. And so gold has basically become less volatile than US treasuries. And, it's got all the obvious arguments. Other people's government paper is not as good as a bar of gold anymore. And so that's pretty interesting. And so I think that gold will become more and more important in the official financial system. And I think that the $7,000 is achievable. And as I was saying, I think that Bitcoin's going to go up faster. If we bring it back to the money supply, you could argue that gold's basically been going up at the same pace as the global money supply growth, which is about 7.5% per year on average. Obviously, it's been going not so well recently because they've been trying to slow down the machine. But basically, gold goes up at, let's call it the money supply of around 7%. It doesn't matter who's printing the money. It doesn't matter whether it's Europe or whether it's America or whether it's China. Provided someone's printing money, then gold's happy about that. And the same is true for Bitcoin. But it probably goes up at a faster pace. Harder to say what that pace is. But I think trend growth is probably still something close to 50%. If you go back over the years. And maybe that's too bullish. But it's something like that. And I kind of think, okay, from my perspective of my gold index, I'm 1/4 Bitcoin, I'm 3/4 gold. Money supply is going up at 7.5% per year. The way I like to think about it is I'm going to get paid once from the gold. I'm going to get paid once for the Bitcoin, the 7.5, once for each, and then once for the rebalancing. Yeah, so the gold index becomes a sort of 20-25% vehicle with volatility of around 14%, which is basically a major stock market index like the S&P 500. Yeah, and I bring it into that framework, and I also am thinking about the market cap ratio that you mentioned earlier. We'll call it 15-1. About how quickly they close. One of the things about Ethereum and Bitcoin, I think the Ethereum bulls don't realize that if Bitcoin, if Ethereum doubles, then it's caught up with Bitcoin. And that's ridiculous. The idea that Ethereum's going to overtake Bitcoin is, to my mind, a pretty ridiculous idea. So therefore, why be so bullish on Ethereum? I'd rather be bullish on something trying to compete with Ethereum, like Solana or something like that, because at least it has a chance to go up. Whereas Ethereum, I don't see how it can outperform Bitcoin. You may as well just own Bitcoin. Basically the bottom line is Bitcoin's going up faster than gold. At what pace? Don't know. Very good question. I'm going to go and look at that for my next piece. And see if we can do some trend Bitcoin versus gold stuff and see where that takes us. But I would think that Bitcoin's probably going up at a 5x pace, something like that.
Yeah. I also because you mentioned Ethereum, there's an interesting thing when you look at the starting point when Ethereum switched from proof of work to proof of stake. Since then, Ethereum measured against Bitcoin is simply going down. Like it's since like over 1 year now, and the dominant ratio between Bitcoin and Ethereum is completely going down since they switched to proof of stake.
Robin, before you say that, it's been going down since January 2018 when they launched the futures contract. Ethereum's been lagging Bitcoin for a long time.
Oh, I did not know that. I only track it from the moment they switched the protocol, because this is like a big switch for me, because they completely gone a whole different route then, and from that moment onwards, it's completely clear that it's not even a slight competitor with it. But yeah, it's January 2018. Interesting. One last question before we go into the end routine. What has to happen, or can something happen for you to go all in Bitcoin? Like, what do you have to see to go completely in Bitcoin? Like, is there something that can happen that is like, oh shit, now I have to take Bitcoin in like 95% of my portfolio, 99%?
So the way the bold index works is I don't decide anything. Yeah. It's an index that's calculated by Vinter in Stockholm, and they pass the information to our ETF 21 shares in Zurich in Switzerland. And that happens at the end of
Mhm.
each month, and they rebalance it. That process is based on the volatility of each asset. So if you wanted me to be 5% gold, 95% Bitcoin, Bitcoin's got to have low volatility, which is possible. So let's say it's 38 today and it comes down to 20 or 18 like gold is today. But something goes wrong with gold, and gold volatility spikes to 300%. So if gold volatility went crazy, why would that happen? Could happen because a meteorite landed with, the supply of gold goes up 10x, 100x. Or why else would the price? Why else would gold go up? Maybe, I don't know. I think you'd have to see a vast increase in the gold supply, something like that.
So something dramatic
Or,
has.
or the central banks going, do you know, we don't like gold anymore. We're going to go with Bitcoin. We're coming, Bitcoin. Yeah. So something like that. I don't think this is a real scenario. I think it's a very unlikely scenario. but I think that is the sort of thing that would see the volatility of gold spike and the volatility of Bitcoin come down. And then the bold index would then have more Bitcoin than gold.
Yeah, so for example, when the Fed comes out, oh, we're selling all our gold and buying Bitcoin with it. That would be crazy.
That would meet your scenario. Yeah, absolutely. And then I would probably say, well, our bold index is now overweight Bitcoin.
In our end routine, we have a routine where the previous guest asks a question for the next guest without knowing who's the next guest is. And the question for you is, what was your funniest or craziest moment in educating someone in Bitcoin?
I think it's this idea. I'm sorry I haven't got a really funny story at this point, but I think it's this idea that people think that Bitcoins have a serial number on them. They meant their mental model, like I did in 2012. Yeah, when I was educating myself, I thought you could cut and paste it, like you could photocopy a 10 euro note. Yeah, I thought you got Bitcoin, get the code, cut it, paste it, 2 Bitcoins. And it wasn't until I understood the provenance of the blockchain that I realized that was wrong. And I think most people have a mental model that has a coin with a serial number on it. And that's wrong. It's more like your family tree. Your DNA, Bitcoin is DNA, and your DNA is a function of your parents and grandparents. And Bitcoin is made like that. So there is no serial number, but it does have a DNA which is related to where it came from. And I think that is the point. And once that penny's dropped, once you understand that, then I think most people start to get their heads around that this whole idea of provenance.
Okay.
And that's pretty powerful, I think. A funny story on educating. I'll tell you what's funny. The fact is that 99% of the world, even after 10 years since Satoshi Nakamoto was chased around Los Angeles on a motorbike, 99% of people in TradFi have no idea and read the same things. It's blockchain, not Bitcoin. You know what I mean? I still think that's true after 10 years. Blockchain, not Bitcoin.
I always say the difference. It's Bitcoin, not blockchain.
Of course.
Where can people find you the best? Where can people get in touch with you?
Bytetree.com.
Okay.
So on Twitter, I'm at Atlas Pulse. Atlas as in map and Pulse as in pulse. And then Bytetree, it's inverted. Is that inverted to you? Does that come out? Does that say Bytetree?
Yeah, it says Bytetree.
Yeah.
It's
It's
correct.
BYTE, bits and bytes. So this is a money tree. It's the idea of growing a tree out of money. So that's why we called the company Byte Tree, to cover crypto.
Cool. Thank you for being on.
Robin, thank you very much.